basically with that said, tonight, I want to take a new look at a bunch of charts that we may have had drawings on and stuff all over. And maybe take some of the things that we've learned over just the past couple webinars and things that we've learned from experience in the past to really determine what we should do with our money. Now, I'll say this, and you might agree, you might disagree, but I'm sure at one point in your trading, you spent some time, you'd look at some charts and you'd say, basically, I bet that chart goes up or down. And, you know, sometimes it would do it right away. And you'd see right away that you were right. Sometimes you think it'll go down and it goes up a little bit before going down, and you fail to realize that you may have actually still been right. Has that ever happened to you? You know, I was screaming back in May. Stocks like Apple were going to go down. They didn't go down very fast, but they went down, right? Sometimes we have to pay greater attention to what's happening overall as opposed to what's happening right now. So let's take a minute and just kind of first look at this chart. And I'm actually going to take it back to a 5-year chart. Not that it really matters a whole lot, but the reason I wanted to go on the 5-year chart is because you could clearly see where a downtrend ended, right? Everybody sees what I'm talking about there. You can clearly see where a downtrend ended. What's the easiest technical tool we would have to use throughout this overall uptrend? What's the easiest technical tool we have? It's the easiest for people to understand. It's the easiest to use. There we go. Just a trend line, right? And I'm pretty sure that you'd agree that this point that I'm on right now is where a downtrend ended. And therefore, if I was going to use a trend line, I'd be running it right about through here, right? Now, what does that say about August 24th? Because I can tell you, at the open, it was below that line, but if you really go back and check, it closed on the 24th back above this trend line. If you went back and looked at a daily chart, you would see that it actually closed. And if you can see my crosshairs there, I've got it synchronized to a daily chart I'm looking at. And August 24th's close was 103.12. You see how 103.12 was back above the trend line? Now, for me, I think there's a lot of other ways to look at this, actually. To make reference of that, I want to pull up another chart from which we had some trend lines on at one point in time. You guys may remember SPX chart I had that we talked about when the different QEs came in, right? And we had trend lines that depicted those quantitative easing points. Back here, this was when QE3 ended, correct? Now, and depending on how you look at it, I mean, you could say it wasn't the short term because it took 10 months. But was this a failure to ignore of a trend line? Or was it an indication of a change to happen? What do you think? I mean, in essence, when we were posed with that at the time, it looked like right here, oh crap, we just failed a trend. Here we just retested it, right? Let's look for a pullback. What's all that then if we failed a trend? Okay. Many times I've found with just using something as simple as a trend line that oftentimes you'll get a hint, but you won't know it's a hint. That's the sad part about it. You get a little hint, and all you can really do with that hint is put it in the back of your mind that this thing's going to fail that trend. Or it has already failed that trend. And if it's failed a trend, what is it I need to look for? The establishment of a new trend, right? One thing a lot of people will commonly do when they trade trends is they'll go from the last point in that trend and connect the new point. Actually, let me take these other ones off here just so we can see things very clearly. Now, if we were to do that, what we would actually have is something where back at this time, we would have said the trend has changed, right? But the trend was actually still in the same direction. You can see that, right? It's still up. It's just not up at the same angle it was up before. Oh, that's not the one. It was right there. So you still have an uptrend, but it was a change in that trend. And everybody can see that, right? Now, if we were to take that same mentality and seen this, what is it we would do? We would again remove this and connect here, right? Now those three trend lines, I guess I can take this back to the 5-year. Those three trend lines that I had here, 1, 2, and then now 3. What can we see happening through the process of establishing that bottom trend line? It's starting to flatten out, right? But let's look currently what we have here. What type of trend do we have? an uptrend. But an uptrend where the angle of the trend has clearly been changing, right? Now, if we had a trend line that had been here since November of 2012, all the way through October of 2014, 2 years, and now just 1 year later, we've seen how many changes in that trend? Well, 2. We had the original trend that went for 2 years. It changed once, and then it changed again. In literally 1 year's time, right? In relation to that original trend that lasted 2 years, would we say the trend is now rapidly changing or slowly changing? Yeah, I would have to agree and say that that is a rapid change. You know, if you really look at that, you know, if you change the trend twice in a year, that's 6 months per trend, right? I'm just doing some redneck math. Which means a trend is lasting only a quarter of the time of that prior trend, so that would be more rapid. You guys also identified that you can see a flattening out simply because the angle of the trend has changed a lot, correct? What is it going to take for a downtrend to be truly established? Well, I have other trend lines on it, Leonard, yes, but I'm talking about a very steady trend that held for 2 full years that has clearly changed. And for this trend to really kind of fan around into a bearish time, we would pretty much have to have a connecting point lower than this blue line, right? And that would basically be the only low point that would make a trend line connecting the bottoms point down. Does everybody see that? Agree with me? And what's that really, really closely in conjunction with as it applies to our discussions over the past few months? Should be a big old note on your desk. I've actually asked on several occasions, just write this down, put it on your desk. There you go, SPX 1800. If SPX goes to 1800, we would then have a clear downtrend, correct? Now, that being said, could you also maybe say that, wow, the trade planning and such we discussed all along really then hasn't changed, has it? Because that trade planning consisted of Guys, there's going to be a lot of kind of wishy-washy, kind of screwy, but it was kind of a line in the sand, right? That 1800 value on the SPX. Throw all that away if you see 1800 on the SPX. Oh, it's just a note that when we started our webinar series in the 1st of August, I told everybody just to kind of keep a note on your desk that said SPX 1800. If you see 1800 on the SPX, you know we're in a downtrend. And what was it that that signified? What was it that the 1800 signified? It was also a change in the trading. We talk about times where the market says to do short-term trades, when it says to do swing trades, and when it says to do long-term trades. What was the market going to tell us to do once it hit 1800? What types of trades? Long-term trades. Not long trades, meaning for the upwards direction, but long-term meaning, well, let's just put it this way. You know, back that, we'll even go at that first trend we talked about, November 2012, that we had drawn on there. Was day trading the best buys you could have done at that time? Or would you have actually probably been better off to just buy and hold? And what I think you'll come up with collectively is, you know, and you could nitpick individual stocks, but if you pick 10 random stocks diversified in different sectors and you just bought them and hold them or held them, you'd probably be doing just fine, right? That 1800 signifies the time where you got to go a little bit longer term on your trades again. Not trading out a couple weeks, not trading out a month or two. You know, trading out 3 to 6 months if using options trades. Why is that? Why do you think I'm trying to make that point specifically? Because I'll tell you, it actually has nothing to do with, well, if it hits 1800, I think it's just going to fall straight down. That might happen. It might not. I know one thing. On August 24th, I turned on the news in the morning and I was told to sell everything and the market was crashing. And the lowest point it saw was when it opened. But we're kind of talking about this in relation to a trend, correct? And for there to be a trend established, there has to be both down moves and what moves? Up, correct? That change into longer time frame trades will allow us to trade a trend. It's truly that simple. Now we can also talk about trends another way. If I'm looking at this on a weekly chart, would I say this was really a move or was it consolidation? this, 1, 2, 3, 4, 5, 6 weeks? Was it really a move, or was it consolidation? I mean, yeah, from the low wick to the high wick here was quite a move, but looking just at this chart, better yet, maybe looking at this chart and look at that same time frame. When you look at it like this, it's like, wow, that really didn't move much at all, did it? So is it maybe possible that because you need both a up and a down move, or a down and an up move, to establish a trend, that should this up move be over, you could have a new trend? Do you think that's maybe a possibility? Now, let's really face reality here. When is it we'll actually know for sure if that's where we want to put a trend line? Probably if it comes down here pretty far and we say, oh, looky, we should have put something there, right? Isn't that how it usually goes? Oh man, I should have saw that was a downtrend now. Well, I wouldn't even say the week needs to close. I'd say the move needs to finish. Is it okay to speculate a trade based on a potential trend? I mean, let's think about it. If I'm short and there's a downtrend line here, where's my stop? Think about that. Could it not come all the way back up to here and touch that top line again without breaking it, and still leave me with the same sentiment that I would have the second I put that on there? So, at some point you have to speculate a little bit. Those of you that have been here a couple years now, how many times did we talk about that old trend line that we had down here? And every time we'd get a touch on it and we'd go long on something, somebody'd say, well, what if this is the last time? Do you remember what my answer was when people asked that question? Oh, come on. There you go. There you go, Ronald. It worked all those other times. Do you guys remember when we talked about this chart before? This was one again that for a couple years we had talked about. And we basically had talked about when it would fail the daily 100 SMA, we would wait for the first close back above it for the opportunity to go long with 6 to 8 weeks. Remember, that's what I was preaching back then. Give yourself 6 to 8 weeks on your longs. And even back here in October of 2014, when it dipped below and closed back above, if you were 6 to 8 weeks, you still had an opportunity to make money, didn't you? Because within 6 to 8 weeks, you were right here. And just like Ronald said, my answer during those times was it worked all those other times. If you guys actually remember, on each of these dips, I took long positions and the profits began to get smaller and smaller. But I said the exact same thing during those times too. It worked every other time. That is no different, really. Than the attitude I think you'd have to approach this trend line here with. And I'm going to change this one just slightly, make it a little more bold, but I'm going to give some equal respect to this one. And what I'm going to say with those two is, with that mindset of it worked every other time, didn't there have to be a first time? Yeah. There had to be a first time, or else there was no every other time. But for those of you that look to establish something simple but also very useful in trading, trends, or the use of trend lines, those two gold lines on my chart would have to really be viewed, I guess, as your holy grail, wouldn't it? Well, I mean, of course, Leonard, if we looked clear back here to, lines I've shown on other charts that I have, this one that you're talking about, the only one left that hasn't failed, well, then there too, you're still looking for a down move, because if you're trading off a trend line and you're defining that as your trend line, you're only going long when it hits that trend line. Therefore, you have to have other sub trends within a bigger trend. But what I'm really getting at is trend lines are easy for people. And why is it that trend lines do seem to be easy for people? It clearly defines what for traders? What does it clearly define? There you go. It would define a stop or a sell point, right? So what do you think would be a good idea for us to start out doing with these two trend lines? How about something just simple like a broker alert? If it crosses above that line, no downtrend, right? And if it crosses below this line, can't really say no uptrend, but I can say wrong uptrend. And yes, this chart's not set up where you see the little lines that say alert, but I created those alerts. Now, what else do you see about those two trend lines? Yeah, they're a wedge pattern, aren't they? Very simple. It's a wedge pattern. People have a lot of different names they call wedge patterns, but it's two trend lines that are not parallel and at some point have an apex point, right? At some point in the future have an apex point. Now, I'm pretty sure that it might be because of those two lines that Leonard said, well, by the look of that, we could consolidate for a year. Am I right, Leonard? Because without even being able to see far enough out, I'm guessing that within a year, they should probably come in so close together that we couldn't take any longer than that within that pattern. When we look at something like this, even before putting the trend lines on there, don't you think that we could also see, just plain and simple, that this last up move reached the resistance levels from before? Now, you could say, no, it went a little bit shy of that, and yes, you're right. But that level of consolidation, the resistance itself, which that's what consolidation does, it builds a support or resistance within a range, basically meaning this range was the resistance. Would you agree that we reached the resistance point? Now, for me, I look at it and say, I have to ask the question to myself, what do you do? What do you do when you reach resistance? What do you do when you reach resistance? Well, we could nitpick it that much to say a whole bunch of different possibilities of exactly what type of order you might enter, but you make some sort of plan to make a sell action, right? If you guys don't mind, I'm going to play a little video here for us to look at so I can remind you of something. Hello, this is Coach Mike from winningstockcoach.com. Going to get ready with my market overview video for the upcoming trading week, the week beginning August 24th, 2015. I'm going to start by saying it might be a little bit longer video than normal for good reason. And also, we're going to spend a little more time studying different views of one particular chart. If you're somebody that likes money, you don't mind spending more time with a little bit of information being presented to you, and you know, if you struggle with the attention span, I do apologize. First off, we're going to be looking here at the SPX. This is the S&P 500. And if you've watched my series of market overview videos, right about since a couple weeks before Memorial Day, I had a high side and a low side target. And, we came within our typical 0.5% of the high side target. And it just looked like that low side target wasn't going to come as this market consolidation started taking place. Now, I do want to take a second real quick on this weekly chart. You see the area I'm circling here and the time period it consisted of. As I told members of the coaches roster, and we talked about this quite regularly, this time period was very consistent with this here and very consistent with this period here. Now, there were two different results of those two prior periods. Here was the tops before the market crash, the last market crash. Here was the top just before the fiscal cliff and into that inception of QE3. Okay, so they were two similar times in that we got, pretty good market pullback out of them at first. It's just one continued the pullback into a crash and one didn't. Anyway, that 2022.92 target that I had for the low side, well, needless to say, we hit it, but it was kind of like using a 357 Magnum when you only needed a BB gun, right? We didn't just hit it, but we went well through it. Let's talk a little bit about where these other targets come from. These are Fibonacci extension targets. Now I'm going to go ahead and pause this right here, because you heard me mention there that actually when I was making that video, I looked at the futures. We were down like 100 points on the Dow. That obviously changed by the time the market opened. But I want to go over to here and I want you to listen to something very, very clearly. And it's how I closed this video. Oh, here that we marked to where it finally said, oh, I'm just focusing on swing trading. And I tell those people, why limit yourself? Why sell yourself short? Because there are times when the markets say, now's the time to invest. Go long term. Hold it based on specific principles. There's times where the markets say, hey, I'm going to give you very consistent swings, consistent up and down moves, and you need to trade those swings. And there are times the market says, hey, I'm going to give you very consistent moves, but for short-term trading, whether that be day trading or trades that last just a couple days. And that's what you need to trade, and those are the trades you need to do to not sell yourself short. Right now, we still have to remain in that short-term trading focus. As it starts to settle a bottom and make a move to give us the signal we're looking for, it'll still tell us to remain in that short-term trading mentality. And once that signal is given, it's going to tell us to swing trade into the prior bottoms. And once those bottoms are broke, it's going to tell us to invest in the trend. Did you hear that right there? This video was sent out to everybody on August 23rd. And what it said was, remain with that short-term mentality. And it actually, I had no idea that it'd be the very next day we would reach that swing target that I kept hovering my mouse around. And I was talking about the different types of trading. I even talked about that second move, which I will acknowledge, I think right now is higher than would have been needed to instantly be thinking we're going to see a market crash. But I want you to keep listening here. This is Coach Mike with winningstockcoach.com, encouraging you to have a plan for your trade, every trade you make. Wishing you the best of luck, but I also want to let you know, for those of you that may be holding long-term investments, don't sell at the bottom. Even if you get a little bit of a wiggle move, if you're holding common shares in a stock, you can buy in the money puts to protect yourself. You're basically, when you do so, entering a break-even scenario to where you're not going to make money, but you're not going to lose money either. It gives you a right to sell your shares at a strike price. If we continue downwards, that's the best advice anybody could give you, to purchase one in the money put per 100 shares of a stock that you own. But to be looking not to sell while it's falling, but for that move it's made before. And to see if that move exceeds that 50% line using your Fibonacci retracements, so that you can determine if you need to then sell on the up move or hold because the up move is actually telling you we're changing course. Good luck to y'all and God bless. Now, if you'll remember during that time, I was speaking to people that might be a little bit afraid, and it was basically just based off the prior week's close, this week's close, that we had closed going into there that, oh crap, look at that weekly candle. And I discussed in that time that you weren't going to see the time to exit your longs right away. But I did mention in that video that I would be letting people know when I thought it was time to exit their longs. And I think it's time to exit those longs. I think it's time, and that you have time, you have a while to start actually studying maybe your retirement plan at work, a 401k, an IRA, something like that you have. Mutual funds and ETFs that have taken the biggest hits in prior crashes. And even though I don't think the markets have defined yet a reason to think you will crash, I think they have defined a time where you will get another buy, and have also defined a time where the trend has clearly changed. So I wanted to play that video from August 24th because a lot of time has elapsed since then. As a matter of fact, at the time that video was made, this was all we could see. And I'm sure you would agree that a lot has changed since that time. Now, the action of selling doesn't always necessarily mean you have to just get out and freak out. Well, but he was selling it at the bottom, Leonard. There is a big difference. The difference in that video said, don't sell it at the bottom. Wait for the up move that we will see. Remember that? And how many times over the past couple months have we actually discussed how some people in the media like to tell us to sell when it's at its lows and buy when it's at its highs. In the past couple weeks, that's all I've heard. Buy, 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 buy. From the same people that when this candle opened and fell down to here, were telling me sell, 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 sell. So even if I only had those 2 points to go off of, even if I only had those 2 points from which to say, the same guy that told me to sell way down here when it hit its bottom is telling me to buy right now. The same guy that told me to sell down here is telling me to buy right here. One, I think, could safely assume that, dog. Or not necessarily him, but contributors to his show, right? Contributors to CNBC. And it's actually because of that that I think this trend line that we have up here is what we need to watch. Let's face it, with every passing week that it stays below that trend line, what happens to that trend line? What will happen to this trend line with every passing week? It'll get lower. Which in turn actually means if we made a down move, but then kept going up, the point line at would probably be lower. Well, it would have to be lower than the point that it was set at, right? It would already have to be lower because you're already on a different week. The value of the lines moved down. So in essence, there's really not a lot to be lost on the long side if you really think of it. If you really think about it, there's not a lot to be lost on the long side. Because with each bit of passing time, the indication of the long side being the winning side will be at a lower price. So now let's go over, with that being said, and get back to where we were when we started. Of course, my charts would lag. And let's talk about trend lines like we started with. Sometimes things make a little peekaboo failure, and maybe at some other time they become an indication of the fact the trend was going to change. Let's just maybe try something out. Let's go from that last low before that up move. Let's put a trend line there. Actually, better yet, let me remove that and use a better tool. Which will actually produce a parallel for me. And then I use it a little bit different, so I got to go through and take some stuff off of it. Does me putting that channel on this chart maybe change your perception of it from what it was just a moment ago? Because I mean, I think it does. It changed my perception even. And it goes back to that point I was making earlier about sometimes just starting over on your chart, a blank chart, to get to the time where you can really hone in exactly what it is you're looking at. Now, with that gray channel that I put up on there, what assumption might you be left to make about the long side? What assumption might you be left to make about the long side? Well, what I was looking for, the long side is the upwards direction, meaning it could still possibly go up some, right? As in, if I were actually going to be using this channel to trade Apple, I would probably have to wait for that top line to be hit, wouldn't I? I actually think back to a lot of the things Sneeb would say. And, there's a lot of trades that happened that he looked at and said, I don't care. If it doesn't come to this point, I'm not buying it. He traded with those channels a lot. If we wanted a physical value as to thinking where that price point might be, we could use something like our Fibonacci extensions from that low point to the high point made, and then to this low. Uh-oh. What happens then? Did your view of the chart just change? Now, we talked about all summer long a head and shoulders pattern that was very, very noticeable on Apple, right? Left shoulder, head, right shoulder, neckline. That neckline being a swing low point. That line that I called the head being a swing high point. A swing low serves as what on the way up? Resistance. And with that being said, does your view of this chart now start to change again? Since I added the retest of that neckline. Did your view of the chart change where, hey, just a second ago, I just put this gray channel line on here and it's like, wow, we could go up some, right? Let's look at something else. I thought this was funny that I actually blogged about this today, and then the exact thing I showed on the chart got 20 minutes on Fast Money. Just some other guy talking, but could this line now here be a neckline for another head and shoulders? Look at it. got a little higher than what you would have wanted on a left shoulder, but visibly, could that have been a left shoulder, a head, and a right shoulder? So did adding that to the discussion? Well, swing points are based off the close of candles. So if that's a problem for you, Leonard, look at it like this. Oh, wow, it just barely got up above the left shoulder close. It came really close to that Fibonacci extension point. And I got the double bottom here as my neckline. Does that change it though? When you maybe look at it this way and now that big green candle's not there to throw you off? It's no different looking at it this way or this way. Now at this point, correct me if I'm wrong, but since I've started adding stuff to this chart, you may have started with, okay, that looked like a pretty good trend line, but it failed and went up anyway. I don't understand that. But okay, if you connect those points, I can understand why you'd put that channel there, and maybe it can go up a little more to that, right? Then we marked, well, hey, if we just wanted to gauge that same move being made, where would it go to from that low? Oh, shoot, it was there, right? Then we looked at a resistance point, a prior swing low that serves as resistance on the way up, and it was there, right? So right now you're probably already saying, man, you've already convinced me. I want to short the hell out of this thing. Is that maybe what you're thinking right now? Because in reality, I'm not trying to hold a pep rally to short Apple. When do you get the confirmation of a head and shoulders pattern? And remember, the head and shoulders is basically swing points, right? Close of candles, that's what I got it marked as here. Here was the head. The two shoulders were close of candles. You could say, well, there was a wick up here. And then when it finally closed down below the neckline, what point does it go to? That you are right, the neckline is the confirmation, but where do you target in the event that you get that neckline failure? Just like here, for this neckline, the target was the prior low, this line. Now you could say, well, it went far below that. Yeah, it gapped down there one day, and by the end of that one day, was already back above it. But for close of candles, you know, we've talked about this a lot even lately. Being a trader is different than being an investor. And what would you rather see happen more? Exceeding your target or not hitting your target at all? Most people would say exceeding my target because then I at least know my target was hit, right? Then I can at least know my target was hit. So let it exceed every target I ever put on there. Because if the target looks appealing to trade to, then exceeding it would be freaking awesome, wouldn't it? Well, if we have that discussion about the prior low, we might have to put a line here, but we could also probably argue that wasn't a pullback, it was consolidation, to which case we might be looking somewhere in the vicinity of one of these two lines. Now, can you see why I would say that? If the head and shoulders pattern most commonly trades to the prior low, why I would say these two were the lows One of those two was the low that started that big up move. No different than this was the low that started that up move. And it was also the low we hit when we failed the neckline. And I think it's really funny because the guy that was talking about it on Fast Money basically said, there's a lot of things Apple could do right now, but if it fails 105, it's going to hit 80. Which would be right there. Now, before you get all hem-hauled and hot and bothered about trying to short Apple to 80 bucks, let's give respect to some other things. Do you see a W pattern right here? You had a bit of an excessive drop, but really look at it. If you can't see it with it like that with the candles, look at it as an area chart. Do you see a bit of a W pattern? And it was from this that I got the 114.71 that I was talking about in the chat room today. Sadly, it gapped down today, kind of hosing me on trading down to that. But can you also see where trading to 114.71 wasn't really the exciting trade to be made? And I want you to really think of something real quick. If you think about what I've also talked about the last couple days with my plan in general, and even what I put on this week's market overview video, was to take smaller positions at which I would sell at the W retest and actually turn into what? What was I going to turn those positions into? A longer term strangle, basically putting 1/3 of a position into calls, 1/3 into puts, and then waiting for a confirmation of either direction to add the final 1/3 in the direction it chose. Now, the reason I'm starting out with talking about Apple is because that gap down on Apple potentially accelerated that plan a little bit. And what I mean by that is real simple. At that 114.71, rather than trading something 2 to 4 weeks out, knowing the importance of the neckline at 105, and this neckline up here at 123, where's 114 in relation to that? In relation to 123 and 105, where is 114? Yeah, that's the middle. And what do you think that 123 or that 105 would be for a trade that I would look to make? Those would be the target points of my strangle or straddle trade. Okay? Does that make sense to people here? Well, Ryan, the real reason to that is, I'll be the first to say not every chart or every scenario is a good strangle or straddle trade to make. But I guess to best answer your question, let me go to the biggest trade I had in 2015. Where a strangle was taken here with profit on the calls, and the puts came down. I sold them for about a 10-20% loss maybe, and turned right around and bought further expiration out, another strangle. I sat and waited for a month until I could add to that. But here's the funny thing. When you're talking about options and also talking about waiting a month, what are you anticipating will happen to the value of your options? They would shrink. You see, by the time it actually made that failure, the premium increased so much that the option was up over 100% and it was at the same darn price. Thus, I was able to average up on the puts. Now, that particular trade was targeted to the prior low here. It just kept falling, even went down to this prior low and just kept falling, then retested it. But the premium inflation that happens even on a confirmed pattern can be similar to like earnings inflation. And also too, for a statement like it just seems like they always seem to end up red, I would have to say that there are some that do, but that statement looks to me like maybe you weren't trading ones all the time, just sometimes. Because when we had a big series on August 24th, when we just sold everything, almost every one of those trades was strangles and straddles, to where the put side was making 800 to 1,000%, sometimes more. And some people, rather than build those positions during consolidation, said, it's summertime, it's slow, I'm gonna leave. And then on August 24th, when they turned on the news and said, hey, market's capping down 1,000 points, it was, I didn't have anything ready for that. But every one of those was a strangle and straddle position. And I had 129 open trades at that time. Now back over here to Apple. It's kind of funny that I went to GMCR because it's kind of the same scenario that we're looking at. Again, I want to say that I wasn't trying to have some big pep rally for why you should short Apple. What I was trying to do was walk you through a development of a technical analysis on a chart, but at the same time, do it in a way that most people do it, whether they intend to or not, to where they start to see things and they start to get convinced. Because I'll be honest, I think Apple will fail that 105, and I think it'll get down into at least that low that it made August 24th. I do think that. But my trade plan doesn't involve thought. That's the important thing, right? If I'm going to have any faith in this Fibonacci extension that I put up here, don't I also have to have faith in this one? What do you think? if I'm going to have any faith in all in the Fibonacci extension here, I can't get hot and bothered about a bigger fall until that 114.24 is failed. At which time, connecting the same points, I could then be looking around 82.85. There are a couple ways to trade for that type of scenario. Could you not take one trade for the 114.24 target and another trade for the 82.85 target right when you put the zero line on it? And when you hit your 114.24, sell that one, take some risk off the table. That's one way you could do it. And we've discussed trading like that before. But the other way, and probably a better way to make that confirmation, would be to make sure it's not going to bounce here, because a bounce from this area would basically give you the assumption of what? Whether it be that 114.24 or that green line at 114.71, a bounce from that area would give you the assumption of what? You know, if it replicated that same down move that was made before this up move, that it'd be from that point that it would replicate that up move, right? So you want to be able to really start to get rid of arguments to one side. Right now, where we're sitting on Apple, we're basically $2 from probably the strongest bullish arguments Apple has left, right? Do you think you could agree with me there? Even Leonard, I'm sure, could probably agree with me there, that we're about $2 away from the strongest bullish arguments Apple has remaining. The W retest, that Fibonacci point that just replicated the fall that was a lower or a higher low. Because it's after that point when you're faced with what? What's your next support level after that fails? What's your next support level after that fails? Just move down. What's the next thing we see? That trend line. Right now, can I have a lot of faith that that trend line will hold? Look at the last time it came down to that trend line. Did it hold the last time it came down to that trend line? Okay, so you know, really, can I have a lot of faith? I'm not saying don't make a trade if it does hold up there. Well, Leonard, I talked about a mountain chart when it came to like those swing points. But the fact that I'm connected down here on a wick and right here on a wick, those are absolute prices, aren't they? Those would be absolute prices, which means the absolute price was right here at 92 bucks. So where I'm getting at, again, I want you guys to understand that this area, that 114.24 to 114.71, at least in my eyes, those are the strongest remaining bullish arguments or support levels that Apple has. Do you see why I'm making that statement? Okay. And if I approach my trading with two assumptions, support will hold and resistance will not be broken, and letting the failures of my assumptions dictate when to trade, let's say I don't want to do the strangle and straddle trades, but I'm starting to see this chart and it's definitely looking to me like it's going to fall and has every reason to, where would I enter my short trade? Excuse me. When the assumptions fail, when those support levels fail, yes. And really what that comes down to is the other supports I would have below here are going to lead me into lower lows then, right? It's actually going to confirm the bearishness. If it holds those supports, it'll confirm bearishness, even if it did bounce up a little bit. So that 114.24 to 114.71, that's a very important area right now on Apple. You know, and this is one of the ones that I had talked about. I even talked about it Monday. I said, you know, if we broke this support line or this consolidation line, it was an all-day Monday, we could have a swing down to 150 or with the 115 puts, but it'd be better to take the 118s. And then it gapped down, so it ruined that. That happens sometimes. But that was just a short-term trade. This might actually be the first longer-term trade that we're presented with making. Now, I would have to say personally still, even with those little bit of bullish arguments that, hey, on that gray channel I have drawn, that Apple might still go up a little bit, that as of right now, it looks to be a bearish trending chart. Would you agree or disagree? And that would be unless you're looking only at like really, really short-term trends, in which case I'll make you happy and put a very, very short-term trend up here. To which case then you'd say, well, if it fails that line, then okay, I agree, right? It'd basically be a line off those first 4 weeks of that move. And ironically then, I'd say even if you waited for that to fail, you're not missing out on much in relation to the total that could be seen on this one. Now that actually takes me over to the next chart I wanted to talk about tonight, which was Facebook. Yeah, I just said one chart looked to me to be extremely bearish. Do you think I'm going to say that about this chart? Yeah, not just no, but hell no. And the big key for that is what? It's not what it did August 24th. It's not what it did anytime before. It's really just what it did over the past 4 weekly candles. The bullishness on this chart is explained right there, isn't it? Now, there's a couple other things you can probably identify with this that I'm going to have you look at. And I'm probably even going to confuse you a little bit with what I have to say about it. I think it was last week we talked about, we were actually studying Facebook a little bit, and we kind of saw, you know, even when it ran up with earnings, it had some down trots. But if we're talking about the probability to produce a winning trade, would a puts trade on an extremely bullish chart give you the highest probability? Not likely. I want to take this one down to a daily real quick. I'm going to delete my drawings off here again, because I also want to kind of backtrack and show you why last week I took some puts and then rolled them over to this week's puts. I think August 24th still had some relevance, even though it might not feel today like it did. There's the relevance I think it had. Do you see what I'm talking about now? And you could say, well, shoot, why didn't we trade that when it broke that swing high? Honestly, I did not think it would get there. Where was my problem? Where did I mess up? Because I did not think, and I'm not allowed to think when I play my trades. Now, using that August 24th low, the high that ensued, and then the low over here, it looks as of right now that it helped to obtain an accurate target point on the chart, correct? Isn't that what it looks like? So then using that high and the low that ensued, I could probably come up with a point that may be able to be shorted to, right? Now, again, I do want to kind of tell you that you've also got to keep in mind the bullishness of this chart. And if you're talking about those probabilities overall, it may not be best to look to short this chart. It may be best to look to short charts that are bearish already, or still, I'll say. But to use a pullback on this chart, which I bet you if I go to the weekly, we find it's fairly close into that swing high point, that should we get a down move, couldn't that actually be something that we would look at as a leverage type play? Is it possible to use Facebook to leverage a trade in Netflix or Apple? You know, we could take puts in both of them and hope it both works out, but we could take puts in an Apple down to a support level, maybe see Facebook fall into that support level, but at that time when Apple gets there, if Facebook happens to be at the point we were looking at for a pullback, leverage with a long position, because a chart that's making higher highs and higher lows is bullish, right? And it's going to give our long trades a higher probability. In a sense, it might actually be better to take something like a half position in Apple puts and a half position in Facebook calls. No different than large fund managers would use gold or silver to hedge against positive beta stocks, right? So, you know, looking at a little bit of a a plan development for Facebook, I don't think we need to necessarily look at taking a puts position into that 99.88 or even down into that prior swing high off the weekly. But I think those would be really, really, really good points to have a broker alert set. Because if we hit those and make a positive move from, those may very well be the best points to take your long if there's going to be any probability towards that long at all. Yeah, I mean, there's different things that happen. I typically like to leverage with the SPY. But what I'm really getting at is if you're looking at trades right now saying, you know, my S&P is at a resistance point, starting to look like it's pulling back. If it were to pull back, where do I want to go short? Your probabilities are going to be higher on charts that you can establish as bearish charts, not charts that might make a red candle. You do understand the difference, right? And that's a very important difference to understand because that bearish chart is more likely to make stronger down moves and weaker up moves, just as that bullish chart is actually more likely to make stronger up moves and weaker down moves. And we've seen that in Facebook, right? Weaker down moves, stronger up moves. But when we go back over and look at Apple, one that still clearly seems to be a bearish chart, we're actually seeing stronger down moves. Now, that's one candle, but that was one hell of a strong down move. Since it became a bearish chart. So we're not just talking about the probability of something continuing to trend a certain way, but we're also talking about the probability of the size of the move. And it's the size of the move that relates directly to what as it pertains to you trading it. The profit, right? The bigger the move, the more you profit. I mean, even the most bullish stocks in the world, eventually they're going to go down some. How much we don't know. And, you know, trying to call the top of those ones is a lot harder than trying to call the top of a bearish chart. So where, you know, on a bearish chart, even if you're wrong on the top, so long as it remains a bearish chart, you're probably going to end up being right as far as profiting on the trade. If we look through some other popularly traded charts, this is one I saw brought up on television today. What does this look like to you if I put a line right here? I'll start drawing lines and I'll wait for the first person to say, looks like this pattern. And it's got a long way to drop before B&M. Man, cup and handle, right? For all the people that like to wait or to try to call a pattern early, you need the cup before you ever look for the handle, right? But to even get the handle, you have to do what? to even get the handle for a cup and handle, what has to be done? A pullback that doesn't exceed 50%. So, quite simply, we just mark some, I'm just going to mark Fibonacci's like literally right on these lines. So we might start thinking M, Ryan, if it fails that 65.11. But here's the other important thing that you would have to note for the cup and handle pattern. So is it possible that we could just go sideways from here to create the handle and it still execute like a cup and handle? Yes, it is. And therefore, we could probably conclude that if there was any relevance to the cup and handle pattern on this chart, that it cannot break that top line for a while, right? And how many directions can a stock move? Three, right? Up, down, and sideways. If we just narrowed down the possibility that it could move up, because to any degree of a parabolic pattern, which a cup and handle is, means it has to spend a little bit of time not going up, we'd have to be worried about one other direction, not two other directions, correct? Which actually then increases the chance that it will go down. Instead of being like a 33 1/3% chance of going up, 33 1/3% chance of going sideways, 33 1/3% chance of going down, redneck math, it'd be like, well, it's kind of 50-50. It's either going to go sideways or down if that cup and handle might ever have any relevance to it. It's kind of funny too. It wasn't this exact stock that Kramer tonight actually discussed the cup and handle and explained it to the West Point cadets. It was the XLF. And he specifically said that from this point it has to go sideways or down. Now that could be scary also if you followed what I was saying earlier, because if he's saying it's going sideways or down, well, shoot, you might want to buy calls. But it's how he was discussing it. He discussed it as more of a consolidation that you want to load up shares during for when it breaks out to the upside. Now put that into relevance of what I'm kind of saying, of where if you're going to short, you want to first not look any lower than 65.11. But if that fails, start planning on the M trade. Where would the target be on an M trade? The prior low. After looking at the August 24th candle, do you think it's possible it could hit the prior low? Think about that. And one other thing to point out with that as well, everybody here knows what the 50% rule is as it pertains to trading, right? We've talked about the 50% rule enough. Would you say that JP Morgan is showing strength or weakness in the upwards direction based on this pullback? Now remember, strength or weakness in the upwards direction is a term relative only to should it make a higher high or a lower high. Huh. Yeah, we 1, 2, 3, 4 weekly closes below the 50% line, right, Ryan? Therefore showing weakness in the upwards direction. Well, how the hell do you call that weakness? It ran for a month and a half. Because weakness is simply implying the expectation for that high to be lower than the prior. So does that not maybe leave us with the exact same thing we talked about on the SPX? Something as simple as a trend line. And I'm going back to these trend lines, not just because they are simple to see and simple to understand, but quite simply, they actually make a lot of sense right here, don't they? We've got a stock that gave us a signal that it was showing weakness in the upwards direction. Now, you guys might remember that series of webinars that we basically did all through August and September. Do you guys remember those? One thing that I said several times during that series of webinars was the hardest part for me was going to be to get people to understand why trading would be inconsistent, be a little more difficult. I wouldn't even be trading as much. Until the media tried to convince me that there was no fear of a crash. And even though I'm going to be the first to say that I wouldn't be expecting a crash on a first down move now, it would be a second down move if it was going to do it. It's right in line with that time period I talked about. They weren't going to do it when they had us all convinced it was going to happen. But now you guys have heard, I'm sure the media refer to August 24th now as a flash crash, right? A flash crash, like it really didn't happen. It was just so quick that we pretended it happened, but it really didn't matter. Like a flash crash. You've heard those terms. I mean, every day on Fast Money, they talk about, well, except for that flash crash on August 24th. Put the signs together of what we're being told. Now, let's also not forget, while yes, JP Morgan made an up move after bad earnings, missing on their earnings, they did still miss on their earnings. Could that be something fundamentally which helped them not make a higher high? Now, one thing I want you to kind of be watching for and looking for is really, really simple at this point. And hopefully you're already realizing it. Your bearish stocks are basically all going to look something like this, where all you have to do is simply put a trend line now across those tops. And while I will say that trend line is very, very speculative at this time, there has to be a first time before there can be an every time. That statement in reference to those trends I was pointing out on the SPX before.